Hello there and welcome back to the course. In this video, I'm going to take a look at a very important tool in your toolbox. A lot of traders ignore this and it's at their own peril, really. But it's position ratios. There are a lot of different ways that traders will try to keep an idea as to how other traders are positioning, because simply looking at a candlestick chart, it only shows support and resistance. But ultimately, I think that the biggest problem that we need to look at is who is placed where. That is a bigger player in this market. There are a couple places online that you can freely look to find out where the overall attitude of participants is. This first one is the brokerage firm in the United States, Oanda, and they have a page here in the analysis section, open position ratios. And you can see that the green turquoise here is long and that's short. So it tells you that Euro Aussie, their overwhelming percentage of traders are short of this pair. Now, this is a secondary indicator. This is not something that you just jump right into willy-nilly, but as a general rule, retail traders lose money, and those traders tend to be wrong more often than right. So statistically speaking, and there have been studies on this, you could literally go through and place your positions the exact opposite as these and make money before it was all said and done. Now, you don't want to be that reckless with your account, but it also gives you some things to pay attention to. So for example, these three pairs right here look pretty dead even. These four pairs really, so it might be something you want to ignore. But when something is completely out of whack like this, and you get a long setup, you know that there's going to be a lot of short covering, and that could send the market much higher. And again, it's not like they always lose. It's just statistically over the longer term, they do tend to lose. The other one is delivered by the CFTC, that is the U.S. Commodity Futures Trading Commission in the United States. This is the Federal Oversight Board, if you will. And this is reporting for futures contracts. Now, I realize that you're trading spot, but they tend to move basically the same idea. It gives you an idea as to who's involved where. Non-commercial, commercial hedgers, read hedgers here, and non-reportable. So there are varying levels. Commercial tends to be a little bit more stable. It gives you an idea, like in this case, Canadian dollar, who is where. The non-reportable tends to be a little messier than the commercial. The non-commercial can be speculators as well. So really what you're looking for is you're looking for stability. You do not want to be involved where the speculators are. You want to be where the smart money is. Another possible target of interest is the open interest. And you can see that the open interest is 154 contracts. So the higher it is, the more interesting it is. So over here in the Swiss franc, it's only 63. The Russian ruble, 47. So obviously the Canadian dollar, there's a little bit more conviction there with the people who are involved. The Mexican peso has picked up a lot of interest. And, you know, this would make sense because the British pound, of course, the Japanese yen are major currencies. The Mexican peso is heavily traded in Chicago, and that makes sense because there's a lot of hedgers in America that are dealing with Mexican companies. Same thing with Canada. But this gives you an idea as to how the commercial hedgers are going into the market. The non-reportable positions, which are basically the public, and non-commercial, those would be like the firms. They give you an idea how things go. Typically, non-reportable is the least reliable. So here we've got long Canadian dollar by about 4,000 contracts. We've been in an uptrend on the U.S. dollar, Canadian dollar, which is bearish for this for a while. So you can see that people were trying to pick the top, as you know, quite often happens. So these are some things to look at along with your trading charts. And if you see a good setup, and especially in something like this, Euro Aussie, look at how many people were short of it. And you see a good setup to the upside, you know that you can really pick up momentum once these people start running away.